Good morning, everybody. It's Chris from Serene Education with the four majors and notes update for the 12th of November 2013. Okay, looking at the four majors this morning, starting with the euro against US dollar, using the FX8 Ultimate template. Let's start with euro. Let's have a look and see what's been happening, how Monday proceeded. Looking at yesterday's candle, we had an upside candle. The sentiment, we had bank holiday yesterday for France, and we had a bank holiday for noticeably the US dollar, but most of Europe was still open. And we had a pullback, consolidation, after the negativity that we saw last week after the interest rates announcements for euro as well as the non-farm payroll figures. So we had a lot of negativity through Thursday, then the pullback, and then further negativity through Friday. And now what we've seen is price consolidating under the 23.6, as we've seen a slight consolidation yesterday after the news announcement last week. So looking at the moment now, we've had a lot of negativity over the past week or so. We have traded below the 50-period moving, the 50% retracement here on the monthly fib, and we're trading below the weekly fib here, which is previous support and resistance level. You can quite clearly see here at the 38.2. RMO on this time frame is still very much above, slightly. However, our RSMO indicator is below. The indicator box, you can quite clearly see we have that negative, that positiveness long term. However, you can see the negativity pretty much in play through the midsection, i.e. daily, 4 hour, and the hourly. However, we're seeing a bit of positiveness through the smaller time frames as we've had this consolidation. If we drop down into our 4 hour time frame, you'll notice that the price has failed to really break above the Thursday highs that we saw last week at the 38.2 here at 1342.70. So, and we're still trading below the monthly fib. So the overall sentiment over here is price is not making higher highs, and if price is not making higher highs, then she's certainly going to be making lower highs, and lower highs means she's in a negative trend. So here intermediately you can quite clearly see that the trend is swing lows, which then else means I should be looking for bearishness. Noticeably, the institutional my 4 hour is well above price, and the candlesticks are very much red. So do have a blue arrow, and that's a consolidation we saw yesterday. However, the candlesticks remain red. RMO is still below. Yes, the RSMO is above, primarily because we have seen a consolidation. So if you look at what's been happening, you can quite clearly see that there's this little intermediate trend occurring on our 4 hour time frame. However, the thing we've got to remember here is this the 38.2 level here, the weekly fib resistance level here, still very much in play. A lot of indecision candles, and if there's a lot of indecision candles with very tiny wicks, very small bodies, that means we don't see a lot of confidence in the market, a lot of indecisiveness, and therefore there shouldn't be any trading. We want to trade with confidence. So we're looking for a nice bearish engulfing or bullish engulfing candle. So in this case, because it's negative, we should be looking for a negative candle to occur here on the 4 hour. So I'm waiting patiently for a 4 hour bearish engulfing candle for me to then allow to target my weekly fib down the bottom here at the 50% retracement level. The only other option, if it is to remain positive for whatever reason and it moves higher, then I need to see a clear bullish engulfing close above the 38.2 my 4 hour for me to then even contemplate looking towards my monthly fib at the top here as my first target. Moving on to sterling, here again, a lot of hesitation at the top here at my weekly fib. The 1600 I put over here in this turquoise color just to remind me this is a clear psychological support and resistance level. You'll notice the price has been hovering around this area. We've had a number of breaches below it. However, those breaches have seen price rallying into the 23.6 fib level on my weekly. So still above. You can see quite clearly the candlesticks on the daily are very much positive. Okay, they're still blue. We have seen a lot of red arrows, however, and we had a lot of pullbacks, primarily after non-farm payroll last week in particular. We have seen price moving lower, and if she's going to be moving lower, then what we're seeing is a swing low intermediately. The swing high trend has been breached. There we go. The noticeable one was a swing high breakout, move to the weekly fib, and then the bounce. Now the correction, now the sentiment is still negative. It's waning. And if you look at what happened on Friday after non-farm payroll, we have a bearish engulfing candle which took out the sentiment on Thursday, Wednesday, and a bit of Tuesday, and then subsequently on Sunday evening we saw a slight move down. Yesterday we saw movement slightly to the downside, and then this morning on the Asian session we've seen further continuations to the downside. You can see that negativity playing through, and ultimately our first target intraday would be the 23.6 here on the weekly fib. We've been here before in the past. A noticeable support through here over a number of weeks. So looking at the sentiment on the indicator box, you can quite clearly see that the sentiment intraday is very much one of negativity. However, the long-term sentiment has been one of positiveness. The R squared on a couple occasions is this is the R squared. We want this to be blue regardless if it's positive or negative, because the R squared is telling me that the sentiment, whether it be negative intraday, is genuinely negative. If the positive, if price is moving higher and the R squared is blue, then it's telling me it's genuinely positive trend sentiment. Okay, I hope that makes sense. So now I go down to my 4-hour time frame. Straight away I get a sell signal on my 4-hour time frame. You can quickly see that the red arrow, red candles, all my moving average above price, RMO is below, Osmo indicators below. And if you look at the 4-hour time frame, I have red throughout and my R squared is complementing that sentiment. So I know it's genuine sentiment to the downside. So therefore, any trades I take to the downside or intraday should be one of genuine sentiment, and therefore 31 pips to the next level is quite a tight move as it stands at the moment now. However, that would be our next particular target for this particular pair. Get below the 23.6, then you can see we have a lot of cleaner air. There's less noise, as you can quite clearly see over here on the left hand side. Down here there is nothing to impede price. We'll be well below the institution moving average, which is negative. And then we get below this. This is what I'm looking to target. I have 208 pips of genuine movement, negative sentiment once we get below that level. We have had a couple of bounces, so for me to shorten to this, I would have to be very aggressive. Is there enough on the plate for me personally? Not. However, I'm looking to see if price can actually drive low. If she fails to drive low and she consolidates yet again, then I might want to take a trade, counter trend, back up towards my institution moving average, because she's done that in the past. Trade it into this weekly web and then bounce it, then counter trade it back to the institution. Okay, so looking for either opportunities. However, the sentiment is one of negativity, so I'm looking for a nice juicy close below my 23.6, my 4-hour. Then I'll look to see if I can get an hourly close below that 4-hour close, and then I'll target my 38.2 down to the downside. US dollar Swiss franc. Yeah, we have seen the US dollar gaining a lot of strength over the past couple of days as the non-farm payrolls really caught a lot of people are surprised. We saw a fantastic figure on non-farm payroll on Friday, and subsequently we saw price really moving higher. We did have a knee-jerk reaction on Thursday's announcement as the news came out that Draghi had cut the interest rates for the euro from 0.50 to 0.250, and we had a lot of negativity. Well, we saw a lot of movement on the Thursday candle because of that. However, non-farm payroll saw the US dollar taking that back again and moving higher. But we're still now trading at the underside of the 23.6 on my daily, and you can see quite clearly the institution moving average is still above price. Notice the indicator box over here, very much positive, guys, and the R squared is complementing a lot of that buying sentiment we're seeing in today. And you can quite clearly see from the daily chart that we have seen upside. We have just clearly broken through a prior support and resistance level higher, which also happens to be a support and resistance in the past. Noticeably, the weekly fib level is still above price, so we are still seeing major swing lows. And if we are seeing major swing lows, then the sentiment is still very much one of negativity. You can quite clearly see swing low, swing low, swing low. And these highs are the highs we saw back in May, the high back in June, the high back in September. And we are in and around this area here where price is trading at the 23.6. If non-farm payroll is genuine to be really good for the US dollar near term, are we going to see price moving higher? Long-term sentiment, if you're looking to buy for the US dollar against the Swiss franc, would need to be trading above the weekly fib here, but also the most importantly, the monthly fib. The institutional moving average at the top of here. We have been above this. We had an attempt above this back in August. However, we had a tweezer top as the price was once the breakout occurred, the pullback fell to find support and to kick on. It actually broke lower, the pullback, and the continuation lower. Here, we have to see a nice bullish break above that institution moving average, above the weekly fib. Nice support being forged. Get a nice support level, and this maintains to the upside. Then we could look to target long term towards the 23.6 monthly fib, and that is a juicy 390 odd pips away. So lots of pips to the upside. We've got to get above it though. You can see here we've had 3 consecutive days where price has been moving higher, but not clearly moving higher than the 23.6. So if you're looking to trade higher, you're going to be trading quite aggressively into this area because we're still below the weekly fib as well as the institution moving average. Aggressive trades into this if you're looking to buy, because you can see that sentiment is genuine. However, take your profits when they present themselves, in and out. Then once she actually breaks above this 22.6 and above the weekly, the institution moving average, then you could start to look to breathe easy. Any trades higher would be genuine because it's broken through this major resistance level here, which is the weekly and the institution, and then we could see price really moving with a lot of momentum to the upside. At the moment now, she's trading back within the consolidative range. She's trading quite close to a weekly fib as well as the institution. Any trades you're taking are going to be more risk averse because of the fact that you're quite close to that level. So there's a lot more risk attached to it. And if I drop down to my 4-hour time frame, you can see the hesitation. You just take the bot. Oops, apologies, used the wrong indicator. Bear with me for a moment. If I take a support and resistance level or a horizontal line and draw it, you can see on the 4-hour we failed to really break above the 4-hour highs. So it's imperative, if we are to see any more movement to the upside, we have to be trading above that. But by the time you get a genuine 4-hour candle, you're very much into the weekly fib level on a 4-hour time frame, which is not going to give you a lot of targets. Okay, and that's what we want. So far better to wait for a 4-hour candle close higher than the 23.6, which would be a really, really good signal that we're looking for genuine long-term sentiment, because it'll be breaking higher highs, which is what we want in a positive trend. At the moment, I was swing high, swing high, swing high, swing high, swing high. We haven't made a new swing high. We've made a new resistance level high. We've got to get above that 23.6 in order to be swinging higher, and then we could target that monthly fib 23.6 to the top side, which is a good 300 pips away. US dollar, Japanese yen. Here again, off and on from payroll. Whoa, a lot of skittishness. This looking at the 4-hour time frame. We go to a daily. There we go. Far better. We get a buy signal. Notice the US dollar, Japanese yen is looking very much more positive now. We are trading outside of this wedge I mentioned over the past couple of weeks. Trading in very much a strong wedge formation, but the institution moving average over here is still holding price higher. So the sentiment was still looking for one of upside. So now what we want to see was a clear break of this wedge, but ideally, and I've mentioned a couple of times, I still want price to be trading above my monthly fib here level at the 50% line, because get above here, there's less noise. Okay, you can quickly see there's one or two areas here, but look what's been happening within this range over here. If I just go to shapes and just draw a box pattern, there we go. You can see that while price has been trading within this consolidative range, you can see there's been more noise occurring within this range. So either if price is to be positive, then get above that range. Okay, and you can see there's a lot cleaner air. There's less likely for price to become involved in any skittishness or indecisiveness once we get above the 50% retracement here on my 50% monthly level, and vice versa to the downside. If the US dollar had failed against the yen recently and broken through the institution, get below the 23.6 on my weekly, then you'll notice there's less noise here to the downside. So that'll be a genuine target to go towards my monthly fib to the downside. Here, after non-farm payroll, pushing price higher. So therefore, I'm looking for that sentiment to continue. If it's genuine sentiment, after those positive figures we've seen, swing highs being made on the daily, get above here, find support, and then kick on. Here we had a breakout recently, but the support candle failed to happen. Reattempt, failed to find support, and it fell back. So we've seen a number of attempts above this 50% retracement level on a monthly. It's genuinely what we need to see is a nice break above, the pullback, and then a nice bullish engulfing candle. Each breakout, pullback, and the bullish here, that would have been our only attempt when we look to trade higher. Every other attempt here was a failed signal altogether. So got to see a nice juicy break above 50%, get above support, and then we could target for the following week a lot more positive sentiment driving price higher. So got to be patient on this particular pair. Give it a lot of time, and once we get that movement, then we could look to generally target the upside. The other scenario is we fail here, and then what we could do is look potentially to see price moving back towards the 23.6 or back towards our institution moving average, which would be our first port of call, because you can see the institution moving average here has been a noticeable pullback area. So back towards our institution would be our first port of call, which is roughly from where price is trading right now to the level 188 pips. But that's only if we see a bearish engulfing candle here. Either a bearish engulfing candle, a tweezer top, which will be the outcome if it's bearish engulfing, a shooting star, a bearish harami, something which shows us clear negativity at this level. Other than this, everything's looking positive, so look for buying opportunities to the upside. That's it, guys. Short and sweet. Please, if you are using this particular template or any of the Serene Education templates, please back it up with sound money management rules. Very, very, very important. It's a great template, but you still got to use the correct money management rules to complement it. That goes for anybody trading any other strategy template out there, guys. You have to have the right money management rules to complement any trading style that you are doing. If you are interested in this particular template or any of the Serene Education courses, please drop us an email at info@sereneeducation.com. The email address will be at the end of this video, and look out for any of the specials we're holding. Other than that, have a fantastic day. Please look out to see if there's any news. Non-farm payroll, after non-farm payroll, we expect to see some volume for the US market, hopefully. But we also have news along today. In particular, sterling has a lot of news this morning regarding inflation reports, etc. So if you are trading sterling, please do so with caution. Otherwise, I'm going to leave you with it. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.